For more on luxury retail and consumers' appetite to spend, let's bring in Bill Simon, former Walmart U.S. CEO. He's now on the board of Darden Restaurants and is chairman of Hanes Brands. Bill, always great to see you. What's your take on this? And if you can put this in the sort of mosaic of what we heard from retailers in general in terms of where we see weakness, it seems like, I mean, you can get a data point from almost every single income cohort that things are not going well.
Yeah, typically, it's not surprising at all. Typically, what you see when things start to soften in the economy from a consumer's perspective is the bottom of the economy, which is always closest to the edge, is hit first. And that happened really a couple of years ago, if you think about it, other than the, the juice that they got from the money giveaways. We saw the middle class really take a hit, start to slow down the beginning of last year. Into the end of last year, and now I think the natural progression would be that that luxury is starting to go. And I agree with you that the extremely wealthy still have cash, and they always do. The amount of miss that we saw from Burberry today, that's got to be as you all were talking about, is the aspirational upper middle class who's just shutting down now. And if you're looking for good news, that probably would lead you to believe that we're starting to come off the top, and maybe we're headed towards a rate reduction. That's sort of the bright side, is the only thing I can see from that.
Well, the rate reduction notwithstanding, I mean, what does it say about the consumer? It's no longer just idiosyncratic stories. It's not just Lululemon by itself. It's all the dollar stores. If you look, it's Lululemon, which I said, it's Starbucks, it's Nike, it's a swath of retailers, and it's some of other names like Pepsi, where you're hearing that they're seeing a sharp drawdown, a sharp slowdown in the consumer. What is the state of the consumer, in your opinion?
Yeah, they're brutal. They've been brutalized for years. I mean, if you think about it, food prices are up 20+%, since the pandemic ended. Housing rent prices are up in the mid-20s to 30%. And if, those two big cash drains are up as big as they are, never mind transportation, which is also up. Where is the discretionary money? And we're on this cycle that somehow needs to be interrupted, right? So prices go up, so we give a wage increases, and rightly so, to everybody. So we now have these embedded costs into the system, so the prices are never going to come down. Wages will never go down. Once they've been given, once people get a pay raise, you never go back and say, give me that money back because we're going to lower the price, or the prices have come down. So we now have this systemic cost that's built in. So we have to go through another cycle of price increases to cover the new cost increases. And we've been through 2 or 3 of those since the end of the pandemic. And I think the consumers finally just starting to hold their hands up and say, enough. We've got a very, very contentious as possible election coming up, and they're hearing bad news upon bad news. They're feeling it in their pocketbook, and they're hunkering down.
Bill, it's Karen. Thanks for being on. A lot of times in the past, you've opined on the Target, Walmart sort of relative value or proposition, or shopping proposition, if it's broader than just grocery. But how do you feel about those two relative to each other now?
Well, I mean, Walmart's been on a really nice run, largely driven by food inflation. Walmart's 50+% of their business is grocery, and those prices have gone up 20+% over the last couple of years. And so that tailwind that they've had from food prices has really propelled them, ahead of where Target was. If you break down category by category between Walmart and Target, they're really not very dissimilar, right? But Walmart's food mix has driven their growth, and the food traffic that comes in for people who come in every week to buy groceries has given them a little bit of an advantage on the general merchandise side. I like Target going forward because they're a really good company, really well run, and they've been hammered. I think they're undervalued. And this tailwind that the food guys have had, that's been a headwind for the broadline merchants, is in the midst of being reversed. And so I sort of like Target coming up.